The difference between internal control and internal audit. So internal control includes the daily control and checking of the applications and proposed control measures. There should be continuous assessment to be made to make sure the proposed control measures and processes are adhered to so that set goals and objectives can be attained. So internal control can be divided into 4 types, namely preventative control. Here, the basis is placed on accomplishments or plans, procedures, programs, budgets, and standards before the work is done, so that it can be carried out correctly from the start. So that's for instance, even before the break-in or theft has happened, you put burglar bars up in front of the windows. It's preventative control. The second one is detective control. A mechanism is put into place to detect problems after it has occurred, such as an alarm goes off after a burglary has occurred. Thirdly is corrective or remedial control. So this is control mechanisms that is in place to help you sort out through problems. So in other words, the alarm is connected to a reaction unit which immediately responds to the alarm when the alarm goes off. And lastly, you get a directive or a guidance control. This is a mechanism that is in place to prevent unwanted happenings, such as a sign saying that the premises are protected by an alarm. So internal control is designed and implemented to ensure that the aims of the business can be achieved. So these aims are, amongst others, to ensure that financial information is accurate and reliable, to ensure that employees keep to the policy, guidelines, and rules of the business, to ensure that the employees respect and honor the norms and values of the business, to protect the assets of the company, and lastly, to ensure the resources of the company are used effectively and economically. So internal accounting control methods and management form part of the total internal management system of the business. These measures are instituted not only to ensure that the bookkeeping is done accurately and correctly, but also to protect the business against losses as a result of fraud and other white-collar crimes. So the aims of the internal accounting control are to ensure that all incomes earned is actually received and recorded correctly. All expenses are authorized and payments recorded correctly. All assets are protected and properly recorded in the accounting records. All creditors and other liabilities are paid on time and recorded in the correct way. And all accounting reports are 100% correct and reliable, and that any mistakes or irregularities in accounting records are picked up and corrected. So that's internal control. Internal control is basically the management throughout the year of the business. Internal auditing, on the other hand, checks if the control measures brought about comply with the set standards in order to reach the goal of the business. So internal auditing is a tool to check if the processes are working and if it's adhered to. It comments on the question of if the business is doing the right thing, and gives an opinion on the way measures are applied and makes suggestions on how it can be improved. So the role of the internal auditor. Now, firstly, you need to distinguish that there is an internal auditor and an external auditor. Internal auditor works throughout the year. They work hard to make sure everything in the business runs as it should. An external auditor only comes right at the end of the year to check the last minute things if the year's work was done correctly. So it's two very, very different roles and responsibilities. Now, the internal auditor are vital in ensuring the internal controls are tested and assessed as effective. They also play an important role in tracing possible fraud or errors that might occur in the business. So the internal auditor will usually be an employee of the business and will earn a monthly salary from the business. However, the independent auditors will consider the reports compiled by the internal auditor. So in other words, the external auditor checks up on the internal auditor's work. The more reliable and effective the internal auditor has carried out the checks, the easier this will make the task of the independent auditor. So this will result in a lower independent audit fee payable by the business. Division of duties. Should any one person be given too many tasks or too many duties concerning financial procedures, it will increase the risk of fraud. So tasks should be divided between employees so that they can oversee each other. So it is also advisable to let a senior employee form part of the process in order to manage and supervise the process. Documentation. For every single transaction that takes place, the necessary documentation must be completed and the necessary authorization must be obtained. So duplicates of internal source documents as well as the original external proof documents of every transaction must be kept in a safe place should there be any later queries. Physical control. It is of the utmost importance that formal physical checks and stock takings are done regularly regarding fixed assets and inventory. So the purpose of these checks is not only to determine if the correct number of stock is on hand, but also to assess the condition and state of the stock. It will ensure that assets are used in a proper way and unnecessary wear and tear is not inflicted. So stock losses can also be picked up early and corrections and alterations can be made to asset registers. In the next video, we will now look at some internal audit methods that is regarded as common in a workplace.